Hello, guys. Welcome to the third session of this course, where we'll be studying multiple concepts which are interrelated with each other. So, first of all, we'll study what are the different types of trend in the market. Then, we'll study what are impulsive moves and retracements in the market or pullbacks. Third, we'll study what are internal and external structures. And related to that, we have got the three concepts that we use in trading, which is break of structure, change of character, and inducement. And then we will study the chart where we will see the internal structure, the external structure, and we will find out these concepts that we'll study in the chart itself. Okay, so let's start with the first one, which is the types of trend. So you should know that there are three types of trend in the market. First of all, we have got an uptrend where market moves like this, right? So we have got these highs, which are called as higher highs, and we have got these lows, which are called as higher lows, right? So this is very basic stuff you should know. So when market goes up once again, creates another high which is above the last high, then these high becomes a new higher high, and these low becomes a new higher low, right? So this is very simple structure that we know, and this is how market propagates to the upside. And this whole movement to the upside is called an uptrend, where market gradually creates these highs and the lows and moves in an upside direction. Second type of trend is a downtrend, where the exact opposite of this happens, where market drops like this, right? This is called a downtrend market. You see market pushing to the downside, the momentum is to the downside. Now these low that market creates, this becomes a lower low, and then we see a high which market creates before dropping once again to the downside, and these high is called a lower high. And once market drops, creates a new low to the downside, once again this is called a lower low, and once again market creates a high before dropping further to the downside, and this is called a lower high. So it's very simple, you can say, structure that we read in the market, that everybody talks about, everybody knows about, where market creates higher highs and higher lows in an uptrend, and in a downtrend market creates lower highs and lower lows. Now in a sideways market, market is obviously, from the name itself, it's a sideways market. That means market does not have any clear direction. Market is moving within a range. Now here, neither the buyers are controlling nor the sellers are controlling. Both are trying, both are fighting over here to take over the market, but both are failing, right? And this is the market that we do not really trade. We stay away from this kind of market, because when market is ranging, if you buy on a breakout, you will get trapped, and also if you sell on a breakout, you will get trapped. So whenever market is ranging or it is sideways, we stay away from that kind of market. Our focus remains on a market which is clearly moving in an uptrend direction or in a downtrend direction. Okay, so these are the three types of trend that we have in any kind of market. These are the only three ways in which market can move. Okay, now let's talk about the next topic, which is impulsive moves and pullbacks. Now let's say market is pushing higher, it is in an uptrend like this, right? So when we see this massive expansion to the upside, this is what is called, this is called what? This is called an impulsive move. This move to the upside is called an impulsive move. Let me replace this one with an eclipse, that will be better. So these move to the upside, this is called what? This is called an impulsive move. Okay, this is an impulsive move. Once again, when market creates another push to the upside, just like this one, this will be what? This will become an impulsive move as well. So what is this? This is an impulsive move as well. So impulsive moves are the moves which takes place towards the direction of the trend. So these are called impulsive moves. And these move that happens against the higher trend, which can also be called as a counter trend movement, these are called what? These are called pullbacks. So if I remove this, in that case, these moves to the downside, these will be called as what? These will be called as pullbacks. These are what? These are pullbacks or retracement. Similarly, here we have got another pullback, right? So let me just clone this. Okay. Okay, so we have got this pullbacks in the market. These are called pullbacks or retracement. And these are also called corrections, by the way. So these are against the higher trend, which is to the upside. And those are called what? These are called pullbacks. Very simple stuff, but we have to understand this to study the next topic, which will be the structure. So these are pullbacks that we see in the market before market gives another impulsive move, which is in the direction of the trend. The same thing will happen for a bearish market as well. For a bearish market, you will see this kind of move to the downside. So in the bearish market, these moves will be what? These moves will now be impulsive moves. This one will be what? This will be an impulsive move. Once again, this one will be what? This will be an impulsive move. Why? Because now the market is bearish. Now market is creating lower highs, right? And lower lows. That means market is progressing to the downside. In that case, this will become our impulsive moves. Okay, so these becomes our impulsive moves. And the same thing will be for pullbacks. Pullbacks will be the movement that happens against the downtrend. That means the highs that market create. This will be what? These will become pullbacks now. So now we can say that the pullbacks are happening on these moves to the upside. These will become what? These will become now our pullbacks. Okay guys, very simple stuff once again, but very important stuff. Very basic but important stuff. You have to understand the basic things to understand the advanced things, right? So you have to understand the basic stuffs, and that's why we're studying this. So these will be called as pullbacks when the market is in a downtrend. So you've understood what are impulsive moves and pullbacks. Impulsive moves are moves which happens towards the direction of the trend, and pullbacks are the counter trend moves that happens against the direction of the trend. Okay, for a bullish market, this will be the pullbacks and this will be the impulsive moves. For a bearish market, these will be the pullbacks and these drop to the downside will be the impulsive moves. Okay, now let's go to the next topic, which is internal structure and external structure, and along with that we will also understand what are these three terms, which are breakout structure, change of character, and inducement. Okay, and then we'll go to the chart and see the internal structure and find out these levels as well. So what is an internal structure and an external structure? So let's say market is in an uptrend like this, market is moving like this, right? So this is what we see in the market. This is how an uptrend is created with higher highs, with higher lows, right? In these movement to the upside, just follow or just focus on these leg to the upside. If you actually zoom in on these leg to the upside, you will see that there are multiple candles over here. You will see movement like this, where you will see, let's say you see a green candle over here, then you see another green candle over here, right? And then you see maybe a red candle over here. And then what do you see? Once again, you see green candles being formed like this, right? And once again, you see another green candle like this, right? And let's say you see another red candle like this. This is how market moves. Market does not just move in one single direction, right? And then you see another green candle like this, which creates this high. Okay, so this is what internal structure is. When you zoom in, the structure that you see in the market, this is what an internal structure is. But when you zoom out and watch the overall trend of the market, overall structure of the market, this is an external structure. But when you zoom in, inside the impulsive move, you see structure like this. Highs and lows, right? This is what you see. The same thing can be seen when market is coming down. Here also you will see things like that. Once again, here also you will see things like that. This is how market actually moves, right? Here you will see things like that, and once again you will see internal structures like this. So actually this is how market propagates. Market does not move in one single direction in a straightforward line, right? Market creates this internal structures, this internal highs and lows before creating the external structure. So these push to the upside is our external structure, but these movement inside this external structure, this is what is an internal structure. Okay, so this is called an internal structure. So now let's zoom in on the internal structure and let's try to understand. So once you look at the internal structure, what do you see? You see that market has created this high, right? And after that market starts to drop. Now look very carefully. Once market starts to drop and breaks the last low on the left side, when market is pushing higher, see, market has broken this low over here, and this is what is called as inducement. Okay, this is called what? Inducement, denoted by IDM. Okay, so this is called an inducement. The last low on the left side has to be broken, and this is called an inducement. Now broken doesn't mean that a candle needs to close over here. That is not important. Even if it is just a sweep, market drops and then closes back up with a wick on the downside, that's also an inducement. Okay, but this low has to be taken. Either candle closes or it doesn't. That's not the case. That doesn't matter. What matters is the low to the left, the first low to the left, which creates the last high, that has to be broken. This becomes our inducement. Once we get inducement, the last high before the inducement, this is called the higher high. Now we're talking about the advanced structure. Here I just gave you the higher high in a very simple term, that market created the high and then market drops, so we call it higher high. Now what actually validates this higher high? This is inducement. Now this is what we are talking about, and we are talking about the advanced market structure. Till we do not get any inducement, there won't be any higher high. Let's say the inducement level was over here and market was moving like this. Now the inducement level is over here. So did market take out this low before pushing higher? It did not. That means that this is not a higher high. So for it to be a higher high, inducement needs to happen. Only after we see inducement, we can call it a higher high. Okay. Now market drops and then once again it pushes higher. Why? Because this is a uptrend. And once market breaks above the last higher high, this is called break of structure. So now the structure has been broken to the upside, and now market is indicating that it wants to continue to the upside. So this is called a break of structure. Okay, now see what happens. Now market continues to the upside, we see a break of structure, and once we get a break of structure, the last low before the break of structure, not this low, the lowest point before the break of structure, these becomes our higher low. Okay, so now you understand why this is called a higher high and why this is called a higher low. Till there is no break of structure, now you have to understand, for break of structure we must see a candle closing. If there is no candle closing, that this is not a valid break of structure. If market just goes up, sweeps the high and closes back, this is not a valid break of structure. For inducement, we do not need candle closing, but for break of structure, candle closing is must. If it's not a candle closing, this is just a liquidity sweep. Okay, this is a liquidity. Why? Because this is a swing high, right? Remember, we have studied liquidity. This is a swing high, which makes this a liquidity point. So if the candle does not close above this high, this is not a break of structure. In that case, this is not the higher low. So for it to be a higher low, we must see a break of structure. Okay, so now we have got higher low. Now market continues to the upside, and once again, market gives us inducement at this low. Why? Because this is the last low on the left side before market creates the high, and now market drops, breaks below this low. Now let's say this low is over here. In that case, what will be our inducement? Is it going to be at this low or is it going to be at this low? I told you very clearly that inducement happens only when the low on the left side gets broken, right? So that means this is not inducement. The inducement is going to be the breakdown of this low, right? So this will become our inducement. And once we have inducement, that means what we have got the next higher high. So now this high becomes what? This becomes our new higher high. Okay, and now market drops, and once again market pushes higher to break above this high. Now once market breaks above this high, what we have got a new break of structure. Once we have got a new break of structure, once again very important, candle needs to close above this high. If there is no closing, it's not a valid break of structure. So once we have got the break of structure, the lowest point before this break of structure, this becomes what? This becomes our higher low. And this is how market propagates, right? This is how market continues on the upside and creates the higher highs and the higher lows. Okay, so till now we have understood what creates the higher highs, what creates a higher low, what is a valid break of structure, what is inducement. Till now we have learned that. Now we are going to understand what is change of character. Change of character happens when the last higher low gets broken to the downside. That means that market drops from here like this and it breaks below this last higher low. This is called change of character. Okay, represented by CHoCH. That means that now the structure has shifted from being bullish to bearish. And now what will we do? Now we will be looking for selling opportunity. Now in this case, what will happen? In this case, market will go up. In this case, this will become what? This will become inducement, right? And once market induces, market will drop from here. So once we get inducement, that means now this low becomes what? Now this low becomes a lower low, right? Why? Because now the character has shifted or changed from bullish to bearish. And now where will market go? Will it go upside or downside? So yes, now it is going to drop to the downside, right? And once market drops to the downside and breaks below the last low, which is the lower low, what we have got a new break of structure to the downside, right? And once we get a new break of structure, that means the last high before the new breakoff structure becomes what? This becomes our lower high. Okay, so this becomes our lower high and this becomes our breakoff structure. Once again, we need to see a bearish candle closing below this last lower low. And this is how market propagates. Market will continue to the downside like this, right? There will be internal structures which I'm not drawing over here because I think I have taught you the concept and you have understood how market moves. And this is in reality how market moves. Market will create this kind of internal structures, give inducement, and then we'll have the higher high. Then it will push once again to the upside, break above the last high, giving us a new breakoff structure. Once we have the new breakoff structure, we have got our higher low. And then we wait for market to once again take out the low on the left. And this is for a bullish market, by the way. And you should know that for a bearish market, the opposite thing will happen. For a bearish market, let's say that market is dropping like this. And then market goes up and it drops like this once again. So now I think you should be able to mark what happened over here. Market was dropping. Market took out the high on the left side. And now this becomes what? This becomes our inducement, IDM. And once we have got inducement, what have we got? We have got our lower low. This is what? This is our lower low. And now market drops once again, creates a new breakout structure to the downside. And once we have that, then we have got what? Then we have got our lower high, right? And this is how market propagates to the downside. Okay, so now you've understood what is a breakoff structure, change of character, and inducement. So now let's go to the chart and show you how to map the chart. Okay, so now we come to the daily, and in the daily, when we are looking to map a structure which is in an uptrend, we'll always start from the bottom. So here we can see we have got this bottom, right? And from here, market starts to create a new uptrend. So we'll be starting our structure mapping from this low. So let's go to the 1 hour time frame. Okay, so see what happened. Market created this bottom, and from here market started this new impulse, this new uptrend. So we'll be looking to mark our structure from this low. So we can see that over here we have got this as the last low on the left side, which needs to be taken for an inducement, but market does not take it. Market creates a new high, then a new high, then pushes higher, and then finally it drops all the way to the down. Now for inducement, market needs to break below this low, and market does it. So market gives us our inducement. Now once we have inducement, that means we have got what? We have got a higher high. So these high becomes what? These high becomes our higher high. So we can mark it as higher high. And now we wait for market to once again push to the upside and give us a break above this high. So do we have a break? So yes, we have got a candle closing above the last high, giving us a break of structure. So once we get the break of structure, that means we have got what? We have got our higher low. And then you can see that once again market dropped and market gave us what? Market gave us inducement, right? This is what? This is our inducement level. And once again market recovers and pushes higher. And now you can see that market breaks above this high. So once market breaks above this high, by the way, when market gave us inducement, this high becomes what? This high becomes a new higher high, right? So we can mark it as a higher high. And then market breaks above this higher high, giving us a new break-off structure. That means this last low before this break-off structure becomes what? Becomes a higher low, right? And after that, market keeps continuing to the upside, creating new higher highs and higher lows.